US stocks were mixed starting the week, with the Nasdaq edging higher, whilst the other major indices were lower. The Nasdaq 100 gapped up overnight on Sunday, with markets reacting to the economic data release from Good Friday, showing the Fed's preferred inflation measure, core PCE, came in line with estimates at 2.8%. However, the Nasdaq 100 filled that gap when markets reopened on Monday. Fed Chair Powell also said the central bank was in no hurry to cut rates.
The economy is strong. We see very strong growth. We had growth for last year over 3%. Many forecasters see growth coming down to around 2% this year. That's about roughly what the first quarter looks like. That means that we don't need to be in a hurry to cut. It means we can wait and become more confident that, in fact, inflation is coming down to 2% on a sustainable basis.
US stocks continued to head lower on Tuesday, with price breaching the 20-day but holding the 40-day moving average. The change in sentiment is due to bond yields rising, with the market reassessing June as the date for the first rate cut. Fed officials have talked down the prospect of rate cuts in the first half of the year, and the market is now beginning to price this in. On top of that, the tech index is coming off a stellar first quarter, with the index up 9.1%, so some profit taking is also likely. Tesla was a major driver of the weakness in the Nasdaq 100 on Tuesday, as Q1 delivery numbers came in short. You can see the reaction to the stock price. One chart worth having a look at is this one, comparing the Nasdaq 100 relative to the Bloomberg Commodity Spot Index. Each time this correlation makes a new high, it precedes a major crash in the tech index, with the chart highlighting this during the dot-com bubble and the COVID pandemic. The correlation is pushing the highs from the dot-com bubble after surpassing the highs from the pandemic recently. Back to the daily chart, and we can see price remaining resilient, holding the 40-day for a second straight day, but it was Thursday where price cracked, breaching not only the 40-day, but more significantly this key trendline in black. Oil was back in the headlines as it spiked higher, spooking investors that the rise in oil could reignite a rise in inflation. The key driver, however, was Fed official Kashkari, the latest official to raise doubts, questioning whether the central bank should even cut rates at all if inflation remains sticky. You can see when he spoke, the Nasdaq 100 reacted in a negative way. The narrative is beginning to change as markets come to the realization that what is currently priced in may be unrealistic. Fed officials have warned about cooling rate cut talk. On Friday, you even had one official talking up rate hikes. This is how much the narrative has changed this week, with yields higher and a tech index lower. There was a snapback rally on Friday in the Nasdaq 100, despite non-farm payrolls coming in way above estimates, strengthening the case that the economy is too hot to handle a rate cut at this moment in time. Prices bounced back above the 40-day and the trendline in black, but you can see price struggling to get beyond this medium-term trend in blue. That will be the sticking point for bulls. All eyes will now be where price closes the week. Price closing the week above the 40-day could create some choppiness going into next week, whilst a weekly close below it would hand over the momentum to the bears. Next week, the focus shifts to earnings, as the big banks are up first, starting from next Friday. But before that, we have the latest inflation numbers on Wednesday and Thursday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.